Hi there, let's see what we have for TSL. I actually have owned this stock in the past. I bought it it was in this higher open here, and then saw it go down a bit and make this it was a big move at the time, this one very big white Marubozu here. And then I sold it here with a 36% profit just in time before this collapse here. And now the stock broke down below this ascending trend line, and it is definitely bearish here, really breaking down hard today, down 9% as we speak. Let me just check that again. Okay, it is down 8.88% at $42.05. Okay, and so why did I buy it and why did I sell it? I was very bullish on solar companies and solar energy, and I still am for the future. And this company had very high revenue growth, but here I guess I have turned very worried about dilution. I was already when I bought it, because this is a recent IPO company, and those companies usually dilute shareholders' value a lot. They don't get satisfied but by what they get here. They keep selling shares. I was also worried about net profit margin shrinking instead of expanding as revenues went up, because of the polysilicon costs were rising. So I saw net profit margin shrinking and the possibility of dilution, and I took profits here. I was lucky in my timing. And what about now? Well, I've updated my valuation model for TSL, and now we have the stock at about $42. The share count rose a lot because they just made a private placement, and founders of the company also sold a big chunk of it, which comes to what I fear the most. This is what I fear the most: dilution. These Chinese guys, they really like to take away money from American investors that buy their ADSs. Well, not all of them, but these these solar companies have been doing that. So instead, I used to have now the number of ADSs outstanding is 25.38 million, and I used to have a dilution factor of just 3%, but now I've increased it to 15%, because in this operation they diluted shareholders' value by about 15%. And I expect them to make at least one per year over the next 3 years, one of these, and not counting on stock options and stuff like that. So 15%, which gives me a final share count of 38.6 million. We have now revenue over the past 12 months of $114.5 million, and I expect the revenues to grow a lot, 100% a year going forward. The company has these internal estimates too, which are very aggressive, but worldwide demand for their solar panels is huge and growing, so 100% doesn't seem all that incredible. But as we'll see, even with this very high revenue expectation, the stock is still not attractive, but we'll get to that in a moment. So I expect revenues to grow from 114 million to 916 million in 2009. But I expect net profit margin to go down from 11.82%, which is what we have now, to just 8%. The company also talked about this. It expects net margin to go down with volumes, and because the costs of polysilicon are rising. But not just that, they're cutting prices very aggressively to sell more and more. And the prices of these solar panels are going down, which is a great thing for the world, but it is shrinking their profit margins. And With all this, I get to a net income estimate of 73.3 million in 2009, which gives me just $1.90 per share of profit because of this very high dilution rate. And let's give it a 27 times earnings multiple, which is way above the market average, but since there's so much hype about solar companies and solar energy, which I think it is justified, I believe 27 is appropriate, and this gives me a final estimated share price of $51.26. This means the share price will rise about 7% a year going forward, and since I look for 16% or more, well, in this case I'm looking really for 40% here in the share price compound annual growth rate, and it is being hard to find, but that's what I'm looking for, the video portfolio. So this is not attractive to me. The model even says it would be good if you sell it at 32.84. It is at 42 now, because only below this price the stock will start returning more than 16%, considering these fundamental estimates. So not attractive. On a 1 to 10 scale, I give it, well, since this is the market average, a 5. Thanks. Bye.